Hey, good morning. Thank you for attending this morning. We're eager to share some ideas with you on taking action on the CARES Act. I want to thank Angelo, Dan, and Pete in advance for turning this around so quickly. Our first meeting on this was just on Wednesday after hours on April 1st. Just a quick note, we are providing ideas and resources, but not specific guidance or recommendations to you and your unique business situations. Each of us are more than happy to engage with you and your company individually as part of your advising team and our individual disciplines to provide consulting and tailor recommendations to you and your leadership team. Okay, so let's get moving. We only have about an hour. Our agenda, I'll provide some brief bios before I share some thoughts on benefits. Then Dan, Angelo, and Pete will provide some insights followed by questions from you, the audience, and we'll close out around 11 o'clock. If necessary, we'll have a short overtime session. Please use the question feature and we'll address them at the end. So on to introductions. My name is Brian Klickener and I am with Risk Strategies. I have worked for over a decade as an insurance broker, in addition to 5 years as an executive with a Virginia-based government contractor. Here at Risk Strategies, my team and I work with clients to create bespoke employee benefits programs that engage employees, maximize transparency while controlling and mitigating costs where possible. From digital enrollment to custom mobile app-enabled employee advocacy to direct contracts with hospital systems and physicians, to even removing the big four insurance carriers from the equation, which can allow for enhanced employee and employer experience as well as cost mitigation. We're doing all these things today for our clients. Angelo Pauletis. Angelo is a principal with SC&H's Tax and Advisory Services with a focus on the middle market clients. He provides planning and compliance experience to create tax efficiencies and structures, pass-through entities, and their equity owners, accounting methods, and tax aspects of mergers and acquisitions. Dan Cathell. Dan has nearly 20 years of domestic and international strategic experience across multiple industries. His experience includes over $15 billion in total transaction value, M&A, IPO, and debt restructuring, as well as the development of strategic finance and operational plans for multinational corporations in the construction, retail, manufacturing, and oil and gas industries. Dan's international experience throughout Europe and Asia includes acquisitions, negotiations for rare earth in China, as well as creating a $2 billion global integration plan that created over $200 million in total value. He has also devised and implemented strategic operational plans that significantly reduce risk associated with current operations while maximizing flexibility and creating opportunities for additional growth. He has consistently created realized value throughout organizations in which he has worked. He has also successfully led as both CEO and CFO private equity-owned organizations for nearly 10 years. Pete Rigoni. Pete is the director of SC&H's group audit team. He has more than 30 years of audit, accounting, and business consulting experience. Pete's clients have included certified small businesses, including SBA 8A program participants, along with middle and large market domestic and international companies operating in the government contracting, energy, manufacturing, construction, technology, and healthcare industries. So just a quick benefits update. I'll keep this short on benefits as I've covered in prior sessions. And I'm sure everyone is anxious to get and jump into the CARES Act. So with that, I have some resources. So I'm going to go ahead and share my screen here to allow for that. Let me share. So, AHIP. So the AHIP website is a comprehensive list of all health carriers and their positions on COVID-19 coverage. So I'll provide this link in the follow-up email. But essentially, we have employers that are on this call and business owners that could be anywhere in the U.S. So, for example, if you want to know how Aetna is handling this gives you a good summary. And then you can actually click through and find out more details specifically about how they are handling, COVID-19 testing and so on and so forth. So it's a good resource that you should be aware of, and you can find out specific information there. Some health carriers are relaxing their eligibility given reduced work schedules. So whether you're furloughing people or they're working reduced hours. So be sure to confirm this for your particular carrier with that carrier and your benefits advisor. And it's my recommendation that you secure some documentation that they're allowing for these relaxed eligibility. I mean, I just saw yesterday that Guardian on the short-term and long-term disability side, they're doing this as well. Some carriers are providing specific special enrollment periods for group health plans. I know United Healthcare is doing this now for employees that were not currently covered on the group health plan. But be aware the IRS Section 125 still governs those enrollments if you are taking employee contributions on a pre-tax basis. So I've got another note here. This is written by my friends at Jackson Lewis, and where they're going through, and it's posted out on SHRM. But again, this link will come to you also. So it basically it gives you the opportunity to potentially enroll employees if your carriers allow, and then you could look to do after-tax dollars as opposed to pre-tax dollars in order to not fly afoul of the IRS in Section 125. So take a look at this, have a conversation with your advisors. And then another piece here is, as a result of President Trump's national emergency declaration on March 13th that triggered tax code section 139. This was originally enacted post 9/11 and has been updated several times since. Thanks to my friend Liz O'Colmain from Clarity Benefits for sharing this with me. So essentially, section 129 enables employers to make non-taxable qualified disaster relief payments to employees for what they call reasonable and necessary expenses resulting from the coronavirus pandemic. Due to the extraordinary circumstances surrounding a qualified disaster, employees are not required to account for or substantiate actual expenses in order to qualify for the exclusion, provided that these amounts, the amount of payment can be reasonably expected to be commensurate with the expenses incurred. So key points from this article: there's no dollar limit, there's no discrimination testing, there's no payroll taxes or reporting, there's no deduction limit. So as an example, reimbursable expenses, potentially medical expenses, increased expenses associated with being quarantined at home, expenses associated with setting up and maintaining a home office. This is a list that are here. There's also a list of non-reimbursable. So take a look at this. I will say, I'm not a CPA and I'm not a tax or an accounting advisor in any way, shape, or form. So consult your tax professional on this to get a further understanding of if this makes sense for you and for your business. Lastly, I posted a couple of webcasts over the past several weeks on the Family First Coronavirus Response Act, or the FFCRA as it's called. And you can find those in two places. You can go to my LinkedIn page, and they're on my LinkedIn page, or you can go to YouTube and you can just type in to search insurancing, and you'll find both of these where we go in depth with my friends Jeremy Schneider and Adam Cowley, go into great depth with a lot of Q&A, a lot of really engaging conversations with the attendees. So hopefully you have the opportunity to check those out. This will be up as well once everything is complete and I can put everything together. We'll get it on YouTube. I don't have the ability to cloud record it, unfortunately. So I'm recording it locally, then I'll post it out to YouTube and share a link with everybody. With that, I'm going to close this out and hand it over to Dan. There'll be a slight interruption as there was a recording snafu. So you'll see Dan's comments start. Maybe you might miss the first minute or so of Dan's comments, but I think really the meat gets into where Dan is actually engaging with you guys, the audience, later on in this. So definitely take a look at that. Thanks so much for your time and attention today.
But most of the lenders that I use are really not ready, right? And they're not ready for a couple of reasons. One, it's been utter chaos. They got changes done at 11:30 last night. They are also moving forward with their specific application on top of the SBA application. So it looks like most of the lenders, especially quality lenders, are probably looking for a Monday morning, mid-morning kind of launch of this. They're doing several things in common. Submit your kind of applicate or request for application so that as soon as it's available, it comes to you electronically and you're notified and you can go fill it out. We are certainly having clients prepare documents now, be it 941s, tax returns, the standard SBA kind of loan documentation program so they're ready to go as soon as the application hits. There's still, like I said, continues to be changes. So some of the answers I have to your questions, I will let you know if it's solid or if they're changing it still. But we're getting, I believe, very, very close currently. I know you're going to have very specific questions about the process, but it's going to be a bit bank dependent. What I will say, if you have not started prepping your documents yet, please start doing so. If you need a list, I'm happy to send you guys a list of stuff that will be required, or at least most likely required. Additionally, please reach out to banking institutions now. Some will not be lending unless you are a current client. I've run into that problem several times already, even with some of the guys that I go to on a regular basis. That's a bit twofold, right? They're just inundated with their requests from their own current customers, and that's a bit of a tricky process. You've seen like J.P. Morgan, Bank of America, the CEOs come out and say, we're not even sure we're going to participate in this program. They're very discouraged by the utter chaos that has been going on for the last week or so. They also, as you guys remember, in the bank bailout, had some harsh fines, et cetera, levied on them in 2008, 2009 period, and they're very leery of potentially giving a loan to someone who would not qualify, and then they're on the hook for what would actually be a quite high risk loan at that point. So there's not been enough rigor developed around eligibility and documentation, standardization of documentation, et cetera, for them to be really concerned. Like submitting 941s around payroll, there's no standardized way to submit that payroll. So some of it's going to be eyeballed, and how quickly it's done, just administratively, it's a bit of a nightmare. So the banks are very concerned. I think it was the J.P. Morgan Chase CEO that said, look, it just wasn't ready for prime time. It wasn't ready to go. They're pushing it out. And we all understand why. People need money, but it's going to be some time before now and when you get any funds under the CARES Act. I have advised clients, if you have started the process with EIDL, and you certainly need the cash now, then continue that process with EIDL and run that in parallel with the CARES Act PPP program, so that you can at least have the funds in your pocket, and then you can pay them back as you get the funds necessary to kind of pay off the EIDL, which is very onerous on personal guarantees, et cetera. Certainly won't be forgiven. The CARES Act is really more of a grant as opposed to a pure loan. The interest will not be forgiven, but the principal will. I say that they can still make the interest forgivable as well. So we're going to see. Regardless, it's 1% with at least 6 months in deferrals. So you're going to be pretty good to go as long as if you need the cash, get the EIDL, get it in place, then get the CARES Act. You can't double up, obviously. So make sure you pay that back so they don't have a reason to come after you for anything, especially on the EIDL. But otherwise, the program is still moving quickly. My biggest piece of advice: please get your documents. Like I said, tax returns, 941s, potentially financial statements. It looks like they're not going to require financial statements, but in case, please be prepared for that. Be communicating with your banker right now to know if they're, one, going to participate, two, if they're SBA preferred lender. If they are a preferred lender, generally speaking, how quickly do they close on their loans? Because not all SBA preferred lenders are created equally. I have guys, and it usually comes down to individual bankers within banks. I will say the community banks for this have been much more responsive and turning things around much more quickly than the big guys, the B of A's, the JP Morgans. A lot of them are saying, like I said, no, we're not taking you. You're not a current client. We're not even going to deal with you. The community banks are not doing that. They're also in a bit of a pickle and a rock and a hard place. If they want to say no, it's not a good thing to be an SBA preferred lender and say, no, I don't want to participate. But there's a lot of concern over, like I said, the regulations, the lack of clarity. Are they going to give loans that all of a sudden they're responsible for as opposed to the government? But then they have their portfolio of companies who may very well fail without these loans. So they're really in a place where they don't have much choice but to choose to go ahead and be a preferred lender. It's SBA CARES Act lender. But the banks are certainly nervous. So they're going to require additional documentation on top of what the SBA is requiring as a general rule, and they'll have their very specific applications. I'd be surprised if they came out with one. I've seen things, and please be wary of this. I've seen applications, so-called applications coming out that were just SBA examples. They were not the final application. So if you filled out something before now, it was not the final application. That's not correct. If you got that guidance, It was incorrect guidance. You need to make sure that you get the actual true application that's going to be required. It's not a big deal. You're going to have to fill it out anyway. It's just a little bit of duplicative work, but that's where they kind of stand right now. And look, everyone on this call, I'm sure, is doing the same thing. We're all trying to get our clients to the top of the pile, right? So how do we get you guys on top to make sure that you get funds prior to the $350 billion running out? One question that came up again this morning is, and it's come up all week, and now there's a bit of differing guidance depending on where you look in the full document. They give examples of what kind of payroll, et cetera, is included. We all know, the W-2 wages, 2.5 months, et cetera, vacation, benefits, healthcare, paid time off, sick leave, et cetera. All that is included in the possible calculation, capped at $100,000. Earlier this week, as recently as yesterday, even this morning, I've heard, yes, 1099 contractors can be included in there. But now the document says both. So there's one place where the document says, and I can read it to you. Hold on one moment. Where did it go? In section 2E II on page 8, it says, and or any amounts paid to an independent contractor or sole proprietor in excess of $100,000 per year. And that's in regards to calculating your payroll cost. So to me, it means, okay, throw your 1099s in. Now in 2H, page 11, it says no independent contractors have the ability to apply, to apply for a PPP loan on their own, so they do not count for the purpose of a borrower's PPP loan application. I reached out to my friend that sits on the SBIC board for clarification, but the document itself, and this happens in more than one place, it definitely contradicts itself, right? So it says, when you're calculating it, make sure you cut off independent contractors at 100 grand. Then later it says, no, they can apply for their own, they don't count. So which one is it? We don't know. And that is part of the problem with this process. Like when I like the guy when he said it was not ready for prime time. It wasn't ready for prime time. They have a lot of errors. Look, it's big legislation. They pushed it through quickly. I get it. But that's why you're seeing these massive delays, especially with the bigger banks. The bigger banks have the process and they just hammer through things and hammer through loans, et cetera. And they're more concerned about making a mistake, whereas the community banks have relationships. They know their customers. They know who's going to be, honest, not fraudulent, et cetera. They have less risk because they have a personal relationship than the big guys who are just processing through loans, which is why I said you're going to have more luck at the community banks. I'm happy to have recommendations from my guys that I use that are really high performing SBA preferred lenders, but some of them, and we've got to hurry, right? Some of them are certainly starting to turn away business just because they can't handle the volume already. So that's been the overall consensus is kind of wait and see. It's been okay, Friday, and Friday has come and we still don't exactly know. We believe we're going to know enough to have final applications ready for most of the financial institutions on Monday. That seems to be a pretty solid answer. But we're just going to kind of leave the weekend for everyone to get their stuff ready on the banking side. But other than that, that's kind of where we are and where we are in this process. The funds are going to go quickly. I talked to my lobbyist. They're already talking about a second stimulus fund regarded to the PPP specifically, that if this drags a bit longer than they think it might. But that's obviously very, very new and not discussed a ton yet. But these funds, they do predict are going to run out very, very soon. I think you have until the end of June to apply, but there's no way the funds will still be there then. So do you want to open up the questions now, Brian, or do you want to wait till the end when everyone?
We got a couple of questions, but why don't we, Angelo, if you're, let's go ahead and jump to you, and then Pete can come in as a cleanup hitter, and then I think we can work through questions. I assume for everybody that's in the audience, I've got a couple of questions queued. If you have questions, please feel free to add them to the list, and then we'll address them one by one.
Thanks, Dan. Thanks, Brian. So the way we've set this up is that Dan was going to talk about the money that's available now through these loans. The tax side of things, which is what I'm going to speak on, is money that's available from funds that you've already paid in some cases. And so the CARES Act looks at both today with regard to these loans, and in some cases it's $10,000. I guess the EIDL thing, that loan was you could get $10,000 up front if you qualified within 3 days. So they're trying to pay attention to the needs today, which is what these loan programs are supposed to do, and also the needs a little bit further down the road, which is what these tax implications are supposed to do. So a lot of these, I'm going to talk about 4 specific things. with regard to the tax issues. The biggest piece is the net operating losses. So net operating losses, when they finally passed the Tax Cuts and Jobs Act, without getting into the technical pieces of it, the TCJA was actually a budget bill, was not a tax bill. And so when you have a budget bill, everything has to balance. So there were some good things in that they dropped the rates and did a whole bunch of good things that were taxpayer friendly, but they also then had to pay for them. So among the things that they had to do to pay for them was some negative things, including this net operating loss. So going back to the 2017 legislation that took effect in 2018 and forward, net operating losses were a negative for the taxpayer. They allowed net operating losses to be carried forward only. In the past, you've been able to carry them back and generate a refund instantly. With the TCJA, they said, okay, we'll give you the net operating losses, but you only have to carry them forward. And that's the only thing that you can do, bring them forward. And not only that, but we're only going to allow you to take 80% of your taxable income in the carry forward year. So it tended to suspend the benefit of those tax losses and carry them forward, maybe for ad infinitum if you never really made a sizable amount of money. So with the CARES Act, they took a look at the net operating losses and says, hey, if we're going to give money away, then let's take a look at the negatives that came through on the budget bill for TCJA, and let's avoid that. Let's give people that are losing money now the ability to reach back and carry back the losses. So the carryback before the TCJA was 2 years. The carryback with the CARES Act is 5 years. So if you think about it, in 2018, the tax rates went down. In 2017 and before, the corporate tax rate was 34, maybe 35%, depending on where you were. So now in 2018, 2019, and 2020, when those NOLs are eligible to carry back, you can reach back from 2018 to get back 2013 at the higher tax rates. So it's a huge benefit. The downside is that you have to file an amended return. It's going to take you much longer. So not only are you looking at 2019 for the net operating losses generated in 2019, and then in 2020, when we have all of the economic downturn, you'll be able to reach back into 2013 for any 2018 NOLs that you have, 2014 for any 2019 NOLs that you have, and then for 2020, which we think a lot of companies are going to have losses as a result of the economic downturn, you can reach back to 2015. So we think this is a huge item. We're not exactly sure how they're going to allow you to do it. When they had this enhanced carryback period in 2009, there was an election that you had to do, sometimes as simple as a statement, sometimes as simple as a filing. So the mechanics we haven't worked out, but I can tell you that we've got clients that are chomping at the bit that have 2018 net operating losses that they thought they were going to carry forward. Now they have the opportunity to carry it back and generate refunds for the tax liabilities that were paid in those earlier years, reaching back as early as 2013. So we think that among all of this stuff, that's probably the most important piece. Now, the next three that I'm going to talk about sort of dovetail into that and allow for deductions. So with regard to the Tax Cuts and Jobs Act, that also was passed in haste. So among the things that was a technical error in the writing of the Tax Cuts and Jobs Act was something called qualified improvement property. This is property that you on premises that you lease. You put in a bunch of improvements. The intent was for those to qualify for bonus depreciation. The way the law was written, it excluded that particular code section that had qualified improvement property. The result of that was that you couldn't take bonus depreciation and deduct that in the year it was placed in service. You had to depreciate that over a 39-year life. So you can imagine basically taking 2.5% over a 39-year life on something that you should have been able to deduct. Well, the CARES Act allows us now to retrospectively to 2017, when the law was enacted, actually September of 2017, to reach back into those years, make changes either on an amended return or on a carry forward basis at your election. And again, the mechanics need to be worked out, but you can free up those deductions and generate essentially refunds back to 2017. If it enhances an NOL, now you can take that NOL and carry that back. So this is for properties that were placed in service from September of 2017 through to today. So it's a retrospective kind of thing. So the nomenclature there is QIP, qualified improvement property. So it's the ability to take bonus depreciation on QIP QIP assets. So item number 3, as also part of the CCJA to balance the act, there was a detrimental delay for pass-through entities, partnerships and S corporations mostly, to disallow losses in the year of the loss that were in excess of $500,000. Translation there, you have an S corporation that has a big event, has a large loss, maybe it pays its employees for some bonuses or compensation that was sort of brought in over time. So when the S corporation had, let's say, a $700,000 loss, it went to the S corporation shareholder. That S corporation shareholder could only deduct up to $500,000 of that loss. The $200,000 would then become a net operating loss, and that could be carried forward based on the new legislation. Well, CARES Act allows that $500,000 limitation to go away, and so the loss that's incurred by the pass-through entity can be taken in the year by the equity owner. So that's huge for entities that have losses that we think are going to happen in 2020, and to the extent that they were $500,000 under the old legislation, now can be deducted without limitation. There are some limitations for basis and passive losses and things like that. They're still in place, but this section 461L that limited individuals to $500,000 if you were married filing jointly, single if it was only $250,000. So that goes away. Dovetail that with a net operating loss, because individuals can have net operating losses. So you can see that this is a very beneficial situation if you do have a net operating loss or a loss that's going to be passed through to you from an S corporation or a partnership. The last one that I'll talk about is the interest expense. There were some limitations that were placed into limit interest that was passed through from specific items. And that was a 30% limitation on EBITDA. As a result of the CARES Act, that's going to be 50%. So all of those 3 things are taxpayer friendly. We suggest you sort of be aware of those things. Make sure that your tax returns are ready to go. If you can carry back a 2018 loss, jump on that as quickly as the IRS will allow us to do so. So Pete, let me throw it to you for financial statements and things of that nature.
Thanks, Angelo.
Thanks, Angelo. And Brian, thanks again for putting this together on such short notice. I will apologize in advance to all the attendees. You may hear noise throughout this presentation, so I've kept you on mute. But we're on now week 3 of working remote. And I'm actually fully dressed, so it's not just a shirt. I know a lot of people will just put a shirt on, but with kids and pets and stuff, I've tried to limit them, but we'll do my best. And I do want to say shout out to Stephanie Alexander. I know she's been doing a lot with this, and appreciate you jumping on, Stephanie, and everyone else who could attend on very short notice. As you can see, based on guidance, even within their own documents, I was reading that last night as well, Dan. I immediately jumped to that about the 1099 contractors. And what does that mean, given 90% of my clients are in the government contractor industry? They treat 1099 labor as if it's labor. So those are, that's got to be fleshed out. So that can't go to the wayside. They got to figure that one out. What I've been telling the clients that have reached out to me in this, there's a lot of things going on, but they need to make sure they have the accounting system and the documentation in place to really be able to run with this, just like you said. And so if they're on, I don't care what it is, QuickBooks or Deltek or Uninet or whatever it is, they need to start making sure they have a way to track this stuff, not only just in their CARES, but there was the FFCRA or Families First Act that has the whole benefit leave and payroll tax credits, tracking those type of benefits, if you're paying sick leave under that kind of act, you have to track that separately. So you should be working with your payroll service provider to make sure you understand how to record those type of benefits, so that any sick leave specifically related or time off related to the quarantining, or if someone's sick, will have to be tracked to get that credit through the payroll tax. I know that's not related to CARES, but we were here, we're having this presentation. I put in the invite that, we want to talk about all the recent legislation that's impacting our clients. And that's a big one because frankly, we're going to see more and more sick leave, I believe, as this thing spreads. Hopefully we don't see it, but I'm hearing more and more cases in this area. So there will be those things to track. The other thing is to your point, Angelo, on these tax carry forward. So I work with a lot of companies that are C Corps as well as S Corps. I imagine that every corporation partnership, it doesn't matter the entity, they'll be able to apply. You can confirm that, Dan, right?
Yeah.
The pass-through entities, non-pass-through entities, if you got a corporate entity. I think what is up in the air is, because I work with a lot of clients that maybe the owners have other businesses of, is it just that entity that you have to count the employees? Is it a group of entities, of affiliated entities? Do you count all employees? Will that put you over the 500? I don't know that there's been any guidance on that, but I think that's something to consider for any of my clients who are filling out applications to understand. There is a spot where it asks where you have to list affiliated owner-owned companies. So many of my clients are in multiple companies. So my recommendation, at least focus on the entity you're applying for and don't worry about the other employees. You still have to list them, but at least what's in your payroll, and then we'll figure out 1099, make sure you're tracking that. As always, I would think just reach out to your service providers, whether it's your CPA or banker. Clearly, you should be talking to your banker and should have been talking to your banker from day one when it started rolling out. To Dan's point about making sure you may not even need these funds, but why not try? Especially for some of the funds that the grants that are really grants and principal forgiveness, doesn't hurt. The issue is going to be how quick you can get access to it. And that's my spiel for now. I think anything else, I'd like to open it up to Q&A if you want. I see a lot of questions.
Yeah, let me.
Yeah. And I was going to say, can you hear me?
Yeah.
And look, they, generally speaking, right, talking to lobbyists, talking to SBIC, et cetera, what they're trying to do, the true goal of this program is to get money out quickly to keep employees paid and on payrolls. So they're certainly going to try to protect against the fraud. They're going to have, the Form 941s, financial statements, tax returns, et cetera. But the sidebar conversations is they're going to be fairly lax. So to Pete's point, go ahead and apply for it. They're not going to make you, quote unquote, prove that you've been economically impacted. You certainly have to certify that you have been. But there's been companies that it would be a somewhat difficult thing to prove right now, right? So they've managed their company well, as an example, and maybe they've had certain work that went away, but they accelerated work from later in the year. So their P&L probably looks fine. It probably looks maybe even better year over year than it did in 2019. But they now have a hole in the background later in this year that they now have to fill. So the sidebar conversations within negotiation with the SBA are around, look, we get it. We're trying to make sure the economy keeps going. We understand that there are a myriad of ways to essentially prove economic impact. We don't have the administrative bandwidth to go through and do that. So let's just make them certify it. Now, look, if they do find out that you did something that you should not have done, they're going to come after you. I would never, ever offer guidance to go apply for something that under the guise that you need it when you know you don't. But most people now probably do need this loan, and they're not going to be, they being the governing bodies, are not going to be, auditing firms, et cetera, afterwards to ensure that they actually need these funds. As always with business, do the right thing and make sure you take advantage of the things you can take advantage of. But it's not going to be a long, involved process with proving. And I've gotten that question a lot. How do we prove it impacted if I've accelerated work from later in the year, et cetera? I'm like, well, you can't, other than, well, my backlog is now way less than it was, and I have a big hole to fill in the end. They're just not going to take the time, they being the SBA, to go through and figure that out.
Yeah, no, thanks for that clarification. And really, that's what I was referring to, is some of my clients are like, well, I'm okay right now. I'm like, yeah, that's now. This hasn't yet gotten to the full extent of what we're going to see. I mean, when you see the governor of Virginia pushing us out to remote self-quarantine till mid-June, or roughly mid-June, I mean, that tells you this is going to last a lot longer. given my clients are government contractors, they're not seeing the impact. But I have other non-government contractor clients who, frankly, one could be on the verge of bankruptcy and literally their business dried up because they were serving the hospitality and restaurant industries. And frankly, when they have no customers paying bills, all this loan assistance isn't going to do anything if they can't keep the lights on and keep their employees employed. So it's tough, and we're just trying to all get through this and provide the best advice we can as we know it.
And to that point too, I think there are a number of industries that will be lagging indicators of these types of issues, right? As we were talking, I think on one of our pre-calls, Pete, we look at companies that are going to stop some of their discretionary spend on services like consulting services that you might be providing to them on special projects. They're going to pull back on those, which will have an economic impact in the back half of the year, most likely. So even industries which are we look at as like knowledge workers, we're all working from home and have the ability to continue doing our job, there's likely to be a trailing effect on us and other companies like that. So you need to act as if now this is the opportunity in the window to take advantage of the CARES program. So with that, I'm going to jump in and go through some of these questions. I think some of them have been answered, but I'm going to ask them anyway just to make sure there might be some additional color or commentary that the team here wants to provide. So thanks, Stephanie. Good morning to you as well. The question is and this was right off the bat, so is your update based on last night's revised guidance? We're debating on 12-month rolling payroll versus 2019, which is the direction on the application form.
So yeah, this was as of like 11:30 last night was the most recent update that I received. There's supposed to be another update this morning. This has changed throughout this week as well. At one point, they were going to allow you to annualize Q2 2019 because some people have already had layoffs, et cetera, in the last couple months. So a trailing 12 would not be good. They were going to give you the option. But as of now, I'm hearing take your 2019 average and annualize it, or multiply by 2.5. They removed the Q2 2019 option. And the last I heard, they were going to stick with this. Now that's still maybe changing today. But I wish I had a more solid, definitive answer. But that's been one of the points that's been moving. What I've been doing with my clients is calculating it in multiple ways, just so when we're ready to go, we have the calculation sitting there, and we pulled I think it's the 941s, et cetera, have been pulled to support that documentation.
Good. Let's see. Is disaster relief a one-time payment?
Yeah, EIDL is a one-time thing. You can, I'm assuming they mean can you get that loan once? You can get that loan once, correct? I believe the max value is $2 million. It has to be fully guaranteed, so they can take your primary residence, for instance. A lot of times on a personal guarantee, your primary residence is not up for grabs. Under the EIDL, it is. It's fairly onerous. It can be for a 30-year term, max of $2 million. But like I said earlier, if you're in the process of applying for EIDL and you need the cash now, keep going. Apply for the PPP CARES funds as well, so that you got to keep the lights on, right? We're all here trying to keep everyone working, make sure we can pay bills, rent, etc. To get the funds as quickly as you can in any way, and then come back and put the CARES Act on top of it and pay the EIDL funds back, because the exposure under the EIDL for you personally as a borrower are pretty onerous. And if you can get out of it, plus, the forgiveness aspect of it obviously is huge. So be able to have the forgiveness of the CARES Act fund and really just have a grant is the way you want to go. But you can do both in the process. You just can't keep both.
Gotcha. Good. Thank you. Also interested in what backup documentation that you would recommend to submit. So I know you've mentioned a few things, Dan, but if there's a kind of more, want to kind of flesh that out a little bit more, that might be helpful.
Yeah, certainly. So it's a fairly long list, right? So there's the general things you would take. There's the personal, usually 3 years of federal tax returns. They also have, that's for the company, personal federal tax return for 3 years. Usually current financial statements, no more than 60 days old. A schedule of business debt, personal financial statement from all the principals. That's usually anyone that's a 20% owner or more. I would assume that will stay the same. AR and AP agings, sales and expense projections, some of your assumptions to those projections, your form, your 941s for the payroll piece, any 1099 miscellaneous, as long as you are an independent contractor. That's not for a company thing. That's going to be the major ones. There might be documents, who's authorized to enter into those agreements on behalf of the borrower, like articles of incorporation, operating agreement, corporate bylaws, meeting minutes, etc. And some of your banks might require financial statements that are audited, reviewed, etc. And you may have the transcript for a tax return, the form 4506T, I believe, so that they can request tax return if you can't apply it, provide it yourself. Those are the big ones. Those are going to be pretty standard across the board. There may be some extra ones here and there, but that's going to be the big ones you got to be prepared to go with.
Got it. Good. Thank you. So I think we answered this, but I'll ask it. So it says, will funds be available to S corps? And I think you answered that basically all pass-through entities. There's not any concern with any limitation for that.
No, they're not. They're not trying to limit anyone available to funds. They're just, the only thing they're truly pulling out is and separating is corporations, be it SC, LLC, et cetera, versus 1099 contractors. So, and they're allowing the corporations to start applying now. 1099 independent contractors can start applying next Friday.
What about Schedule C? I forgot to mention that one, Dan. So I'm an LLC, single, it's a entity, but under the tax rules, Angela, you can correct me if I'm wrong, single member LLC does not file a separate return, goes through on the Schedule C, but it is a separate entity, a legal entity. So
Yeah, you should be fine.
that's what.
I mean, everything I've read is not going to be an issue.
So this is another 1099 question. So this is going back to your kind of initial statement, Dan, just about not including contractors in payroll. Is this correct?
Yeah, I mean, the document contradicts itself, right? It does very specifically say we're not including them because they, like we said a minute ago, they can apply for their own. But to Pete's point, there are certainly, especially in our area with the federal GovCon stuff, where 90+% of their employee labor force, which they kind of consider W-2s, are actually 1099s. The pushback they've had about that is, the real impetus around taxes, and taxes are what funding this bill, et cetera. Where has it been paid, or people getting double counts, that kind of thing. So that's where the kind of argument comes in. But the document is not clear. This week it's been, we'll allow 1099s to not allow 1099s. So as of now, what I would do is calculate the W-2 payroll and all the additional costs, et cetera, and then 1099 separately, so you're ready either way. Because I've asked the SBIC for clarification. Just haven't received it yet. I asked that at like 9:40 this morning.
Dan?
This isn't. Go ahead, Angela, please.
Dan, if I can, I think what we've come to some interpretation is, I guess, a couple of different things. The 31-page document that was written seems to be written by different people, so you've got different definitions and actually different styles of how it's written. But the one piece that the 1099s seem to apply is that, and you alluded to it earlier on page 8 of that 31-page document that came out last night, is that you can, it implies that you can add the 1099s when you determine the maximum amount of the loan. After that, the 1099s would not apply. They're not part of the forgivable piece. And that's one interpretation. So I don't know. It is not definitive. It doesn't say it's only by implication.
Exactly. I mean, you definitely can't, if you take the four corners of the document thesis, you can't do it, right? Because they're depending on which page you're looking at, you don't know which guidance to take.
So let's see. Do the funds have to be fully utilized within 2.5 months from the loan date for the PPP?
For forgiveness, the amount that's forgiven, you have to demonstrate you used, and it's used for very specific things: payroll, associated benefits, rent, mortgage interest, etc. That has to be used, which is fairly easy to prove you used it, right? Once you proved you've used it, that's the forgivable piece.
So maybe a little bit of a technicality. So I think the question was 2.5 months. So the determination of how much you can borrow is based on 2.5 months of your average.
Right.
What the forgiveness is over an 8-week period, 8 weeks
yes.
after you get the money.
Correct. Yes. Very good point, Angelo. Yes. 8 weeks after you've received it.
So actually, this is going to dovetail into the second question in a second. But when you're talking about like the payroll, right? So this payroll, and you mentioned additional costs for that employee, right? So you talked a little bit about benefits. What kind of comprises that? There's some limits, like the upper end is like 100,000. But if somebody's making less than that, like, is there a way that you can accumulate other like known benefits for that individual and calculating what your payroll is?
Yeah, so let's say to take an easy example, you pay for healthcare benefits for the person, the family, et cetera, usually the person. You can add those, paid time off, sick leave, et cetera. Your ADP, whomever, payroll provider, if you do it internally, that should be getting tracked anyway. You should know what that cost is. That can all add, and it's basically saying, it's kind of a counter, right? If you got a guy making $150,000, you get $100,000. That's it. If you have someone that's making 50, you can add as much of this in as you can to try to get to the $100,000. So it's trying to give you a little bit extra buffer on those employees without rewarding people for paying people, $1 million a year in salary. And that was geared more towards, well, they're the business owner. They should have to kind of deal with it a little bit anyway. We'll pay their employees, we'll pay their bills, but we're not going to pay them. But yeah, that's where that is kind of coming in.
Gotcha. Good. Thank you.
And they're given a pretty exhaustive list of it. So
let's see. From a calculation of the loan value or application value perspective, would you take wages and or salaries and other affiliated costs for those, like you just mentioned, up to that 100,000 for individual employees, divide by 12, then multiply by 2.5?
correct. That's exactly what you do.
Okay. Let's see. Dan, you mentioned that you could change. You could change again this AM. Is there this? They could change again this AM. Is there a time frame? Our bank was originally thinking they'd have their site up this afternoon, but it seems like any major changes, and they're going to have to punt.
Yeah, I mean, the conversations I've had this morning, as late as this morning, right before this call, was most people are shooting for Monday because they've not gotten final guidance on some of the stuff from the SBA, including their specific questions. You're seeing that from the big guys and even some of the community guys. Like I said, the community guys are pushing a bit more than the big guys are. The big guys are being a little less, or I say, sorry, a little more risk averse and making sure they get full clarification. There will certainly be banks out there that come out with applications, et cetera, today. I just don't know if that's going to be all that helpful. My guess is what will happen is there will be changes after that will require additional documentation or additional answers, so they'll have to addend their application for the bank person specifically. But I believe by Monday, when everyone gets really hits the street, I think Monday is when you're going to have really no changes at that point. Not saying you can't go ahead and start applying now and getting your documentation, et cetera, together. You should be doing that, absolutely. And if your bank has an application and you have a great relationship with them, and you feel that they're guiding you that our application is not going to change, we're good, go ahead, fill it out. Just get going, because speed to application and getting your name at the top of the list is going to be really important in this process.
So I think we've kind of race through these next three. So is the application out yet? You just mentioned that, so we don't need to talk about that. Can you elaborate on the next two? Are really related? I think you just answered it like a minute or so ago, talking about what's the definition of salary, and can you include benefits? And the answer to that is yes. Okay, so here's another question that we haven't answered yet. Can you substitute one employee for another? For example, Sally Jones leaves the company as of March 31st, but she is replaced by Frank Smith at the same salary. Can Frank's salary be substituted for Sally's salary?
Well, that's why you're taking the 12-month period, right? So it doesn't matter if A becomes B, it's still the same price or cost as A, or if it's a little bit different, you're still taking the average over the 12 months and then multiplying that by 2.5.
Gotcha. And let's see, is the application for PP going to be final today? This is an unknown, right? This is
Fingers crossed. We're a big hurry up and wait right now all week long. So we're certainly hopeful that it's all finalized and done, and the screaming and shouting is over. But the way it's been going, I can't say for sure.
So any suggestions for folks who are revving up? So this is like maybe more seasonal businesses. So 12 months don't reflect the needs of like May and June that are coming up, or there's some kind of a seasonality to their business.
Yeah, and there's that. There's also startup questions, like a business just started recently, doesn't have 12 months of payroll, et cetera. truthfully, like email me. I was researching that and having conversations this morning on that aspect. So I don't have the greatest answer currently. And I don't want to tell you that I do when I don't.
Oh,
But I'm digging into that. So feel free to shoot me an email afterwards. I'm going to have an answer pretty soon.
yeah. So this actually, she popped in and clarified. So this is actually, I think, more from like a GovCon perspective, where maybe they're expecting to have a ramp up inside of a contract, or they've won a contract that's going to start a period of performance in that time frame.
Right. Yeah. So that specifically, I've not seen addressed. It's a good question, right? You're just growing rapidly. My guess is what they would say is, well, that's great. You're growing rapidly. You don't need this.
Yeah. Why do you need the money if you just want a big contract?
Right. That would be, that's what I would say as a person trying to lend money. Like, you don't need me. I'm not giving you free money.
Hey, Stephanie, they can go out to, who our friends are to give AR borrowing still.
Yeah. Factoring AR, you gotta love that. That's real cheap.
Let's see, we've got a question here. There was a brief mention of FFCRA. Can you talk about how the FFCRA and CARES and how they play against each other? How do those interact in this environment?
I mean, everything we're doing is really pushing on the CARES stuff, right? We have not even kind of sniffed around FFCRA for various reasons. They're not. You can still have both. Like there's no, like you can't go and not use the FFCRA and CARES, et cetera. It's not like the EIDL versus CARES. So there's not a lot of overlap between the two that I've seen so far. But we've kind of ignored the FFCRA a little bit, just because it doesn't make sense when you can have the CARES funds.
Got it.
Yeah, because the FFCRA, really, there's no money coming directly. It's just a reduction of your, say, payroll tax.
Right.
You submit your 941 to pay for, offset what you're paying for any of the people that you have to pay, sick leave or paid time off under, that qualify under the FFCRA. So that's why CARES is actual money. It's cash. Yeah. That you can get. It's loans or grants if it's forgiven. And
right.
I know one question that's not on the list, but we talked about in a pre-planning call yesterday is, well, if there's debt and it's forgiven, is that going to be taxable? And Angelo, you said that's not, right? They're not going to double dip on it.
Correct.
Last question that we have, and we still have some time, so if there are more questions, please feel free to engage. So, can monthly fees such as HIPAA compliant servers, etc., be included?
They've been fairly specific about what could be included. That one I would say is no. It's more like interest, mortgage, rent, utilities. It's the way I think about it, and we talked about in the call yesterday, is how do I keep the lights on? So how do I keep the lights on and how do I keep guys working? That's the stuff that they're going to include. They're not going to kind of include these compliance fees, et cetera. That's a different cost outside of what they're trying to accomplish.
Gotcha. Well, with that, I don't see that we have any additional questions. We're going to, if nothing pops up here in the next minute or so, we'll go ahead and give back some time. I know that Angelo, Dan, and Pete are, they're revved up and kind of waiting for SBA. It's like the hurry up and wait kind of situation. But we do appreciate everybody's engagement, questions, and activity on this. And I really want to, thank Pete, Dan, and we have a question now. There's a thank you that came through. So you're welcome, and thank you for being active on the Q&A, Steve. Thanks a bunch. But Angelo, Dan, and Pete, thanks so much for getting this together so fast and being willing to give some time out to the community. And for those of you that are interested in additional information, there'll be an email that I'll send. They'll also have access to your contact information. You'll see they will be copied on the email that I send out post webinar. So you can reach directly to them if you have specific questions or if you have general questions. We appreciate your time today. There is a quick survey as you're signing off. We'd be grateful if you would complete that. There'll be something that comes out more kind of automated tomorrow that'll have that same survey. We'd be grateful for any kind of feedback on that. With that, we've got 2 minutes, no questions, and I appreciate the interactivity on the Q&A, just saying thanks. From a HIPAA perspective, my chat got shut down yesterday because I don't know what happened, but we're new to expanding Zoom out to all 1,800 plus of our employees, so they shut down some features because of HIPAA. So I can't talk with you guys the same way that I'd like to, but such is life. Anyway, and you guys have anything lastly that you'd like to sign off with?
Appreciate everybody's attention. This is a fluid situation. We're still looking for a bunch of stuff, and hope everybody's well.
Yeah, no, Brian, appreciate it. And certainly to Angelo and Pete, certainly appreciate your guys' input in this process and what I've learned. And to everyone on the call, look, if you need something, you'll get the email with our contact information, et cetera. Even if it's just a sounding board, feel free, reach out. As Angelo said, really fluid. We're struggling with this as well. Have as much information as we can, and just trying to prep to make sure your guys get put at the top of the list.
Yeah, ditto. Thanks everyone, and appreciate everyone who could attend on short notice. And hopefully it was as informative as it can be given the nature. But again, first and foremost, hope everyone's safe, sound, and able to get through this as best I can.
Great. And in the last closing, just a logistics question. Jen, thanks for this. So it is being recorded. Another HIPAA thing, there's certain like limitations that they provided. So I had to record it locally. So once it gets down onto my machine, I'll push it out to onto YouTube. So sometime this afternoon, it'll be out there, and you'll be able to find it and view it there. So thanks for that question. And that, we're 1 minute early. So have a great Friday, and thanks so much.
Take care, everyone.
Everybody.